Hi friends and greetings from beautiful Tallinn in Estonia, where I've been since yesterday. Really lovely city. I came here to interview the CEO of Bondora and Lightyear. We'll bring you the interview very soon on my YouTube channel. But yeah, in today's video I want to actually talk to you about a concept that's not often talked about in investing, right? In investing we always hear about all the glamorous things and the fun things of investing and why we should do that. And that's important, right? But at the same time, people don't really tell you that investing is fun when you start and once you're rich. But the boring part is in the middle. By the way, guys, these are the street names in Tallinn. So you can see they definitely love the saunas over here. But yeah, let's come on a little walk and talk with me and I'll take you through the concept and what I mean by that. Because yeah, again, obviously when you start investing, well, maybe before you even start, it might be a bit daunting. But then finally you pull the trigger, good on you for doing so, and you start your first investment. You buy your first stock, your first ETF, your first Bitcoin, and it goes up, feels amazing. And the gains feel huge, right? In the beginning, even you put a bit of money, maybe you turn it into a 200, 300, even 500 euro profit, you feel like the smartest investor, and guess what? You're hooked, you love it, you continue investing, you add more money into your portfolio, and that's cool. And that's an important part of investing, because you should feel the excitement about it. But guess what? Unfortunately, like many things in life, that excitement will also start wearing off. And after 6 months, 12 months, maybe even 2 years, you won't be as excited, right? You start following what I preach often and many others, dollar cost averaging. Every single week, every single month, you add a certain amount, same amount over time, and it just kind of loses its sexiness, right? You're kind of less excited, the same amount gets deducted from your bank, it goes into your broker, you start buying more of the same stock or ETF that you invest in, and you still start seeing some gains, hopefully over time, but it's less exciting, right? Because it's more predictable, you know what you can expect. And that's when over time, the dopamine starts wearing off, and you're just a little bit less excited than you were when you started. That's unfortunate, but that's the case. I always compare it with going to a gym. Come 1st of January, so many people, they have their New Year's resolutions, they get all excited, they start signing up to the most fancy, expensive gym, different classes, they go there, maybe even twice a day, all excited to get into the best shape of their life. And they do see progress in the beginning. But the same thing here, right? After a few months, life happens, it starts wearing off and they move on to other things. And unfortunately, it's the same with investing, right? So here we have the same thing, but that's exactly where the magic happens. Not in the loud part, not in the start, not in the end, but in the middle part, the silent part where most people stop over time. That's when you need to endure, stay consistent and do it anyways. Same with going to a gym. And that's where I always talk about compound growth over time. In the beginning, the compounding growth is very much flat, right? You won't see a major change. But then exponential growth, because it's not linear growth, right? Where it's a straight line, it's exponential growth when we invest. And you will only see the benefits at the tail end of that. So again, that takes patience, it takes time, but you will see the benefits. And the same with health, investing in yourself and any other things really in life, your career and so forth. You earn significantly more towards the end of your career than the beginning, right? That's totally normal. The same with the investments. But if you make it through that boring part, which is part, we've all been there. I mean, myself included. And yes, I've been sidetracked, right? I mentioned on the channel before that I, start dabbling around with meme coins, which was completely crazy. And I learned my lessons. That wasn't very smart. I burned a lot of money. But I did it anyways because I lost that dopamine, and that's fine. Maybe for you, if you invest in ETFs, it is adding a couple of individual shares just to keep the excitement going. Totally fine. I'm not saying don't do that. Just understand that it can get boring and repetitive over time, but that's totally normal. And that's actually, in fact, I think what differentiates average investors from great investors who keep on investing and doing what they did. Same as Warren Buffett, he is the best example of that. His investment in Coca-Cola, really paid off over the long term. What he now gets in dividends, absolutely mind-boggling. But if he was to sell it halfway through, he would be nowhere close to that number. Because over time, if you make it through that difficult period, the boring period, so to say, it will get more fun. So once you're rich, however you define rich, right? For different people, it's different amounts of money. 100K, 6-figure investment portfolio, right? A 10% gain on that, which S&P 500 can easily return, that would equate to 10,000 euros in gains. I mean, that's a used car or a very lavish holiday, right? That you made purely by investing. I think that's when it really starts getting exciting again, right? For me now, my portfolio has also grown, but I'm nowhere near to where I want to be in the future. Of course, my next goal would be to hit, in terms of stocks, ETFs and crypto, the 7-figure, right? That'd be my goal. So I'll definitely get there in the coming years. Still takes me a while, but I'll get there. And then imagine on €1 million portfolio, a 10% move equates to 100,000 euros just in gains from your investment. I mean, that's just crazy money when you think about, purely by having your money invested, which you wouldn't have otherwise if you just kept it in your bank accounts. So I think at that point, you're starting again, really getting very much excited about investing. But at the same time, you wouldn't get there if you didn't make it through that boring part, as I refer to. So that's very important. So be very conscious about it and embrace it, because it will happen to all of us. But at the same time, do keep in mind, once your portfolio grows, it also gets more volatile. Because yes, while a 10% upside on a million portfolio is like an amazing number, keep in mind, the same can go the other way, right? Because investing is not only a straight line up. I mean, we've seen many years of periods where we have seen a declining stock market. So that can definitely happen as well. So once you see your portfolio drop by 30%, let's say on a 100K portfolio, that's 30,000 euros in drop in your portfolio value, right? Which is painful. So obviously, again, it just makes it more exciting also, but you gotta still be very patient and long-term invested, because if you panic sell then, you will materialize the loss. Otherwise, it's just a paper loss, right? It doesn't really change anything or do anything to your portfolio unless you really sell and take the loss, which hopefully you wouldn't be doing. And for me, I really started to embrace that volatility, which in the beginning kind of freaked me out a little bit. Now, I really only invest in things I understand and have a long-term conviction in. Not because somebody told me to buy it, but because I studied the company or asset class and I'm really long-term bullish on its potential. And that's why I allocate my own capital towards it. So now when I see my portfolio going up, well, I'm excited because my portfolio grows. At the same time, when I see my portfolio going down and asset classes that I invest in dropping in price, sure, on the one hand side, I get a bit upset that my portfolio value goes down. On the other hand, I'm actually excited that I now get more value for my money, so to say, right? Because the same stock that I previously bought a month ago, a year ago, at a higher price, now I can buy at a cheaper price. And that will, in the long term, generate me even higher gains, right? So for me, it's kind of a win-win because I really have a long-term time horizon. If you're a trader or if you're really short-term focused, have a year or 2-year horizon, sure, then it's a bit tricky. Imagine you're 60 or 70 years old, you're close to retirement, then obviously volatility wouldn't be so fun for you, especially if it's on the downside. So then often what people do, they shift their investment strategy. They become less aggressive and more conservative, which makes total sense, right? Like I would personally be investing way less into crypto or more risky assets when I'm older, because then I want to preserve my wealth and kind of know what I have without having a 30% drawdown in my portfolio. It makes total sense. I would recommend you the same. If you're younger, you can definitely take more risk because you have obviously potentially more time to recover from this volatile times. By the way, guys, how pretty is the city? I mean, really surprised. I think my second or third time here, but it's been a while ago. And yeah, really discovered this hidden gem of the Baltics. I mean, I'm obviously based also summers in Vilnius, Lithuania, which is awesome. But Tallinn, really recommended. And yeah, really interesting. Actually, by the way, it's apparently one of the most digitally, if not the most digitally advanced country in the whole of Europe. I mean, you can basically do anything online. You don't have to go to any governmental institution, banks, everything is done online here. Really, really cool. You have some huge companies obviously coming from Estonia, even though it's only a country with 1.3 million population. I mean, tiny, and still they made companies like Bolt, Wise, Skype when it was started. Many fintechs like Bondora, like Lightyear, so really, really cool. Some smart people. Even things like, if you're a resident in Tallinn, you get free transportation just by being a resident, completely free. You don't have to pay for any transportation, public transportation that is, which is really, really cool. So yeah, really loving this place. Had a great time, so definitely check it out if you want to swing by sometime. And yeah, hopefully this video was useful. Once again, embrace the suck, embrace the boring, the same way how we do it with working out and exercising, career, anything in life. There will be difficult parts, there will be boring parts. And that's the important part. If you want to rise to the top, so to say, to make it through that difficult, you'll see the light on the other side and you will really be surprised how your portfolio will grow over time if you're not taking crazy risks, moving in and out of positions, because that's usually a recipe for disaster. All right, friends, with this, hope you enjoyed the video. If you did, give it a like, subscribe to the video, helps out a lot. Next up, check out this video over here. As always, thanks a lot for watching. Stay healthy, get wealthy. To see you in the next one. Ciao.